Bioretec released their H1 report yesterday, and we have the pleasure of having the interim CEO Sarah Hubar-Fisher with us for the interview. Welcome, Sarah.
Thank you. Thank you so much.
So would you start by first shortly introducing yourself and talking a little bit about the Q2 or H1 for Bioretec?
Yeah, sure. So I'm Sarah Hubar-Fisher, the interim CEO of Bioretec. I've served as a member of the board of directors of Bioretec since 2021. A little bit about H1 and Q2. I'd say it was obviously an eventful period for our business. We had a series of milestones achieved, such as our oversubscribed funding round with respect to our rights issue. We had the first RemeOs cases in the EU performed. We continued the advancement of our commercialization and our product portfolio globally, with new hospital approvals advancing in the US. And we increasingly focused on our operational readiness, continuing our efforts to build a stock rather than to build to order, and increasing our inventory availability. It was also clearly a time of transitions. I had the honor of stepping into the role of interim CEO in mid-May, and thus I stepped down from my role as vice chairman of the board as well at the same time. Globally, we've been focusing on the assessment of our distribution channel partners, including the conclusion of some of our early pilot collaborations in the US and a shift from stocking to direct distributor partners, so that we could focus on end customer sales and margin improvement. We indeed did have as well in this period a one-time adjustment that was related to the conclusion of one of our pilot distribution partners and agreements, and we also had the related credit invoice associated with that, as well as some variances from our distributor partners outside of the US, which can account for those year-over-year variability at the level of the quarterly sales. Overall, though, although it's not fully reflected in our sales numbers, we really remain committed to focus on a renewed commercial strategy and operational plan, as well as progressing our innovative pipeline and preparing for future inflection points of top-line growth.
You mentioned the one-off costs related to the end of the Spartan Medical distribution agreement. So is it possible to quantify the size of that negative impact on your revenues to kind of better understand the underlying development?
Sure. Well, while I can't actually comment on the magnitude of the impact, what I can say is that this decision reflects our intentional strategy to shift from stocking distributors in the United States to direct distribution partners with, again, a focus on that end customer sales and margin improvement. And so I'm pleased to say that, in this period of transition and despite this event, we still remain steady in our top line growth for the period.
I guess most of your revenue development came from Activa in this period, and there were some declines in Europe and USA. So were there some specific issues that you faced during the period?
Yeah, so let's talk about Europe, I guess, more specifically. So although we announced and it's been said multiple times that we received our regulatory approval at the end of January of this year, it actually took, due to an error with DEKRA on the indication listed on our certificate, we had to wait until the end of March until we received an accurate certificate from DEKRA with the proper indications listed. And only with that can you then go out and start to approach hospitals and engage in sales. So we really only started to negotiate with hospitals for the first cases for RemeOs in the EU in the beginning of April. So that's quite a delay from the actual regulatory approval time of end of January. So that certificate did delay our efforts there. However, within the exact same quarter of us starting our efforts, we performed the first RemeOs cases and across 3 different countries in the EU. So we'll continue to focus on developing the EU market and furthering our efforts with RemeOs, which, as we also mentioned previously in the financing round and perhaps in the H1 report, that these cases are also serving as real-world evidence for the United States as we continue to build our clinical data repository to help support with future pipeline regulatory approvals there. In the US, I think what you're seeing are short-term variances, again, as I described kind of in the opening of this interview. If we were to have received perhaps maybe some normal stocking distributor orders in Q2, in line with the normal cadence of orders, we might have seen a larger sales result coming out of the United States. But again, our intention is to move away from stocking distributors in the United States. And as a part of that transition, instead of taking another stocking distributor order, we had received a credit invoice at the conclusion of our pilot agreement with one of our stocking distributors. So although, we continue to work with Tri-State, for example, as a stocking distributor in the US, our intention is to move our business 100% direct. Or close to it in the United States, so that we really get that margin improvement.
Thanks. So about then RemeOs development in Europe, as I understand, you can move into some of the countries very quickly, as you already described, and then some countries take a little bit more time to clear for country-specific processes. So can you talk a little bit about this, the status of rolling out RemeOs to different countries?
Yeah, so we have a clear strategy now between our regulatory group and our commercial leadership around our targeted countries where we feel like we could have the most value and impact in the registration processes and timing. And that goes for the EU, but it also goes for all countries around the world that recognize the CE mark. So we're on track with our progress there and continuing to focus on that. And as you mentioned, different countries have different regulatory processes, and some are faster than others. And some costs are lower or higher than others in terms of achieving those. But we remain committed and focused on delivering on registrations as planned.
What would you say is a reasonable expectations for the business development in H2? Or do you expect some kind of small scale test use that will very gradually grow, or do you expect some maybe bigger distributor orders?
So what we expect in short is, of course, we're committed to growth. And that's what we're targeting. I think for a company of our size, the variability can be extremely high in a very short period of time. And that's again why we talked about why we're building to stock and not building to order. We can see inflection points, particularly in markets like the US, pick up quite quickly. So although usually when you launch a new product into the market, whether it's in the US or globally, there is usually a gradual ramp up of time required before you see those inflection points in medtech. And that's honestly surgeons getting used to those procedures and actually the results of those cases and follow up a couple of months out. So that's a normal process to go through, as well as sometimes those reimbursement discussions and impacts, and they can also inflect your inflection points. So in short, we're continuing to focus to build our US market presence, and you can almost call this a bit of a relaunch into the United States with increased direct headcount on the ground and a shift to the direct distribution channels and really driving brand awareness and increased marketing into the US, which are important drivers for sales in that market. And Activa does, as you say, continue to be both the main driver for growth for us globally as we continue to ramp up RemeOs sales in parallel. But we are committed to growth in H2.
You mentioned almost like a new launch. Did you experience some difficulties with the stocking distributor model, or what was the rationale for focusing more strongly on the sales agent model?
I think right now it's really about optimization. So continuing the stocking distributors is feasible. It's not that it's not an option, and in some cases, perhaps in cases of pediatrics and other specialty indications, it may still be something worth considering for Bioretec. But on the whole, success comes through improved margins and top line revenue, and that comes mainly through direct sales distribution channels. And that is the way to approach the US market. So I think we've learned since 2023 that for us to succeed in the US, we really need to be closer to those end customer sales. And so that's our objective.
So if we think about the current status in the US and RemeOs sales, what would you say are the main bottlenecks and hurdles for you to overcome next?
Just like with any novel technology, this is a new material. It's a breakthrough device for a reason. It's a real new material science, and it's targeting surgeons and getting them used to using the product. As we've always discussed, the product actual implementation process is the same. There's not much in terms of workflow that actually needs to change, but it is a different material. It feels different. It has metal-like strength, which they're not used to with other polymer-based absorbables. And also there is the post-surgical scans that look different a bit than titanium. And so training surgeons and getting them used to seeing what they see post-surgery with a magnesium-based absorbable is part of our training and education process. So the bottleneck is really time. It's patience and time. Aside from that, I think we have a lot of the wind at our back. The market is, in the US in particular, is primed for an absorbable like ours. We are getting really good surgeon feedback across the board, both in the EU and in the US from folks who are using the product. So our clinical feedback is strong in real world. And so it's simply just a matter of time.
One of the important things to build your long-term growth in the US is indication expansion beyond the current signaling indication. So do you have any news on that?
Yeah, we continue as one of our primary focus from a regulatory perspective is continuing to expand our indications in the US and working closely with the FDA on that. Our second indication, it should be the gateway to the third and the fourth, as well as honestly the rest of our pipeline. So, we are extremely focused and committed on building out indication expansion on the RemeOs trauma screw, as discussed for the additional designs. But also as referenced in our H1 report, we're proceeding with our clinical data on the drill pin. And we've got a site, our site has been initiated. So that study is underway, and we'll continue to provide more updates on that as soon as we have them.
Same question for the US market that I presented for the EU market. What would be for the investors a reasonable assumption for the RemeOs sales for the rest of the year?
I think for the EU market, which is well known, you can compare this, I think, to any other med tech company also introducing novel tech between the US and the EU, is you're going to see more price sensitivity within the EU market. And so it does really it really hinges on the company's ability to identify markets that have the ability to that understand the value of Bioretec's breakthrough products. Right. So, like I said, EU is historically a price sensitive market, and targeting specific countries within the EU and really focusing on driving adoption in those markets that understand the value of breakthrough material science, like our RemeOs product, is going to be the key to our success in that part of the world.
Let me ask it this way. When do you expect your US sales agent model to be in kind of full operation, when all the sales agents are fully trained, they have access to a reasonable number of hospitals and so on? So what would be the timeline to really have the engine going at full speed?
Well, as you saw in Q1, we brought in the most distributors to date, so we have 8 now on the East Coast. I cannot comment on the expectation specifically for what we have throughout the remainder of the year, but you should expect to see growth from us in the number of distributors coming up also in H2 and expanding our geographic footprint into the West Coast. I think into 2026, we're going to continue to look to invest in additional resourcing there to ensure that we have even more feet on the ground. But we will have a broad distribution network set up by the end of 2025 across the United States. I will say, or that's our aim, and that's what we expect. I will say, though, that that's the first step, as we've outlined in other discussions, is the focus. Once you have your distributor set up, first you train those distributors, and then those distributors need to select, identify, and train specific surgeons. It's not just like suddenly when you have state coverage, the whole state starts using your product. So again, these processes can take 6 to 12 months to ramp up, and distributors onboarding is simply the first step of that process.
About your cost size, your operational expenses went up quite quickly. What would you say? Are you kind of happy with the current level for the rest of the year? And do you feel that you have perhaps overreached in terms of growing the Opex as the sales is lagging a little bit behind?
No, I mean, I think in any kind of med tech business in a growth company, when you're preparing for growth, investment is necessary. And this is in line with the communication we had related to the recent financing round. Our Opex is increasing at a planned rate related to the ramp-up activities of commercialization of RemeOs globally, the single-use instruments, which we rolled out in Q2 as well as the direct sales support in the United States. So these were all planned use of funds from the rights issue. That we believe is going at a planned rate. We're not concerned.
And then one other question on your numbers was the increased working capital level. So can you talk a little bit about that, the reasons behind it?
So again, this is a bit more from our move from our build to order to build to stock mentality. When you shift from stocking distributors to direct sales distribution channels, you're responsible yourself more for managing and holding on to that inventory, as opposed to, stocking distributors who take that on for you. So for us, that inventory build up of those inventory levels and then maintaining them on our books for a longer period of time are going to affect working capital, but that is simply just the nature of the trauma business. Trauma procedures are not planned operations. That's why they're called trauma. Uh, but you do need to have inventory build and the investment for that ready in order to be able to support those cases. So it's a critical part of what we do, and it's a nature of the business.
Then about your R&D pipeline, you're scheduled to roll out the drill pin this year and then other rollouts in 2026, 2027. It seems a bit like a challenging schedule. So how would you comment on the pipeline?
I would say for sure we're ambitious in our product development side of the business and always have been. There are things that we cannot control, which is the case of every company operating in this space. The regulatory environment continues to be interesting and sometimes poses challenges. But the good thing about a breakthrough device designation is that you are then supported in a way to try to help you work through those regulatory processes. That's different, than if you didn't have that indication. So, look, we do have a planned number of product rollouts, product launches planned, let's say, over the next 3 years. And our ambition is to remain committed to those targets and to achieve them. Whether or not the regulatory environment will work with us on all of that remains to be seen. But, we remain committed to trying to push forward and deliver on those targets for our innovative pipeline.
One of the things you highlighted in the report were the development of single-use tools. Can you talk a little bit about the importance of those, and was this a bottleneck for you for sales, or is it more about growing future opportunities?
Yeah, I think it's in line with kind of preparing the market for growth. As a small company, we're limited by what we can manufacture and what we can deliver in a certain period of time. And so we're obviously looking at our operational plans globally as well as part of this strategic review. Um, but this decision around the single-use instruments is critical for us in the US in that it increases the availability of instruments to be ready for cases so that we could actually increase and support volume as needed. With reusable instruments, obviously you're subject to sterilization. Those also cause sometimes infection control problems and issues with timing of availability of those instruments on a reusable basis. And with the introduction of single use, it makes it much easier for surgeons to have what they need when they need it, and also not worry so much about infection control and the sterilization process for the hospital system. So for us, it was a move to say, when the market is ready to hit that inflection point, we're going to be ready to serve it. And we decided to already invest in those for the active cannulated screw. So that was our first investment in single-use instruments for the United States. And we're looking forward to adding on also single-use instruments focused on the RemeOs screw.
One of the important things about, especially in the US, are the reimbursement situation. So, can you share as much as possible for us about the status of the reimbursements in the US and perhaps in Europe?
Sure. So in the US in particular, we're able, and actually globally, we're able to leverage um, existing codes for procedural codes that exist for the cases that we do. So it's not that we need to apply for any kind of new coding to receive reimbursement for our product. The question really becomes, what is that reimbursement level, and how does that reimbursement level align with the innovative nature of our product and our technology? And so we are in process of applying. We've applied for a pass-through payment in the United States. And if received, that would obviously help supplement any related reimbursement existing codes for payment purposes. So we anticipate hearing those results in the back half of this year.
You've been commercializing now for a while, RemeOs in the US. What are your kind of major learnings, and have there been some mistakes during the commercialization?
Um, I wouldn't call them mistakes, but I would say, what we've learned, as I mentioned earlier, is that we need to go direct through our distribution channels. We've also learned that we need more feet on the ground. When we approached the US market back in 2023 post approval, we approached it with our direct headcount was from abroad. And so it took us a while to actually get, the first feet on the ground as Bioretec headcount in the country. And so that I would say probably delayed our process in the market, as well as the decision to, pilot with a stocking distributor rather than being able to be ready to go direct from day one. So I think those things, in hindsight, delayed our time to market. But they're learnings for us that now you can see and our results are being rectified. And the shifts that we're making now to increase our headcount on the ground and manage direct distribution channels more actively.
To wrap up, is there anything else you'd like to add?
Just that I'd like to know that I really believe that the strong participation of our recent funding round shows the continued investor confidence in our journey ahead. And I want to thank our shareholders for that and reassure them that, as a whole team, we're committed to continuing to drive growth and deliver this innovative product pipeline to surgeons and patients alike. And thanks for the opportunity to have this conversation.
Sarah, thank you very much for the discussion and interview, and best of luck for H2 for you and Bioretec.
Thank you so much.